You ever check your bank account after payday, and somehow, within a few days, it feels like your money just evaporated? Like, you know you got paid, but between rent, groceries, subscriptions, and that one small purchase you didn't think mattered, it's gone. Meanwhile, you hear that rich people are out here buying mansions, cars, even funding their entire lifestyle, without actually spending their own money. And you're sitting there thinking, how does that even make sense? My name is Leonard, and I spend way too much time thinking about how rich people live on loans. If you're someone who feels like you're working hard but never really getting ahead financially, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. The big misconception. Here's the thing. Most people are taught one very simple rule about money. Debt is bad. Avoid it at all costs. And look, for most people, that advice is actually correct. Credit card debt? Bad. Personal loans for consumption? Worse. But here's what most people don't realize. Not all debt is the same. And rich people, they play a completely different game. The core idea, assets versus income. Let's break this down simply. Most people live off income. You work, you get paid, you spend, repeat. But rich people? They live off assets. Think stocks, businesses, real estate. Now here's where it gets really interesting. Instead of selling those assets to fund their lifestyle, they borrow against them. A simple example. This changes everything. Let's say someone has $5 million in stocks. Now, if they sell $500,000 worth of stock to live on, what happens? They trigger capital gains tax, which can be 15% to 30% depending on the country. Their investment portfolio shrinks. They lose future compounding. So instead, they do something smarter. They go to a bank and say, "Hey, I've got $5 million in assets. Can I borrow $500,000 against that?" The bank says yes. Why? Because that loan is secured by their assets. The math behind it. Let's run the numbers. Loan, $500,000. Interest rate, say 4 to 6%. That's about $20,000 to $30,000 per year in interest. Now compare that to their portfolio. Historically, the stock market, think S&P 500, has returned about 8 to 10% annually over the long term. So on $5 million, that's $400,000 to $500,000 in annual growth. So they're paying $25,000 in interest, while earning $400,000 plus in asset growth. Let that sink in. They're literally using debt to live while getting richer at the same time. Why they don't sell? Now you might be thinking, okay, but eventually they have to pay that loan back, right? Yes, but here's the trick. They usually don't pay it back the way you think. They either refinance the loan, use new loans to replace old ones, or settle it much later using their estate or asset restructuring. And all this time, their assets keep growing. The tax advantage. This is huge. Here's another piece most people completely miss. When you earn income, you get taxed. In some countries, up to 30 to 45%. But loans are not income. That means if you borrow $500,000, you pay zero income tax on that money. Zero. This is where it gets really interesting. Rich people are not just avoiding selling assets. They're also avoiding taxes, legally. The psychology behind it. Let's talk about mindset for a second. Most people see debt as something that traps you. Rich people see debt as a tool that unlocks liquidity. That's a completely different way of thinking. It's like a hammer. In the wrong hands, you break things. In the right hands, you build wealth. Why this doesn't work for everyone? Now, let's be real for a second. This strategy doesn't work if you don't have significant assets, your investments aren't stable, you're borrowing for consumption without growth, because then you're just stacking risk on top of no foundation. And that's how people get into financial trouble. A relatable analogy. Think of it like this. Most people are trying to eat by cutting pieces off their only loaf of bread. Rich people? They own a bakery. And instead of eating the bread, they borrow money against the bakery, while the bakery keeps producing more bread. What the data says. According to reports from the Federal Reserve and wealth studies from firms like UBS, the top 1% hold the majority of their wealth in assets, not cash. Ultra-high net worth individuals frequently use asset-backed lending. Many billionaires report relatively low income on paper, despite massive wealth. That's not by accident. That's strategy. Actionable steps. What you can actually do. Now you might be thinking, cool, but I'm not sitting on $5 million. Fair. So here's how you apply this at your level. 1. Focus on building assets first. Before even thinking about leveraging debt, build something worth borrowing against. Index funds, rental property, a business, because no assets equals no leverage. 2. Shift your thinking about money. Start asking, is this expense helping me build assets or just consume? That one question alone can change everything. 3. Use debt strategically, not emotionally. Good debt helps you acquire assets, has a reasonable interest rate, is backed by something valuable. Bad debt funds lifestyle upgrades, has high interest, doesn't generate returns. 4. Start small. You don't need millions to apply the principle, even something like using margin carefully in investments, leveraging property for growth, business reinvestment strategies. The principle is the same. A short story. This hits home. Let me give you a real-world scenario. 2 people each have $100,000. Person A keeps it in cash, spends from it over time, eventually runs out. Person B invests it into assets growing at 8%, borrows small amounts when needed, keeps the asset base intact. 10 to 15 years later, Person A is starting over. Person B has multiplied their wealth, while still living comfortably the entire time. The hidden risk. Don't ignore this. Look, this strategy is powerful, but it's not risk-free. If markets drop and your assets lose value, banks can call in loans or require more collateral. That's why rich people diversify heavily, borrow conservatively, work with financial advisors. The real lesson: this video isn't about telling you to go take out loans tomorrow. It's about understanding this. The wealthy don't play the same financial game as everyone else. They don't just earn money. They engineer their financial system. If you take one thing from this video, let it be this. Stop thinking only about how much you earn. Start thinking about how your money is structured. Because wealth isn't just about income. It's about assets, leverage, strategy. And once you understand that, you stop playing defense with money and you start playing offense. If this changed the way you think about money even a little bit, hit that like button, subscribe to the channel, and drop a comment below. Assets over income. Because once that mindset clicks, everything starts to shift.